to Murdock Manwaring's monthly market update, where it is just the stats. We are your neighbors in the know. And today is a big day because we are going over the stats for not just December, but for the year to date in 2022. So let's get rock and rolling. Just so you know, we do this in 4 sections. If you're wondering how long this is going to take, we're going to do an overview of the stats, and it's about 13 slides. Then we do a snapshot of the month, and then we do our current inventory. And then at the very end, you're going to want to stick through because we've got 9 stats on trends, which is our local versus the national. So it should be really good. Hope you'll join us. And by the way, if you love real estate like we do, make sure you're liking and following our pages and head over to mmcidaho.com. And at the top, you can subscribe to the newsletter and get these stats in your email every month. All right, Chad, or no, Jeremy's up first. Jeremy,
yeah, very
why don't you walk us on through what's going on?
Well, let's talk about it because Jessica, you said year to date, but the year's over. So it's year in closing. We're now 2023 year to date the next time we talk. So let's talk about the entire year of 2022, see how it compared to 2021. First thing we want to look at is just the month of December. This is a pretty staggering number. Because in 2021, there was 251 homes sold or transactions, buyer and or seller. In 2022, there was only 130. So we not only hit the brakes, but we slammed on them because that's only half for that month.
Crazy.
And so if we look at the entire year and see what the transactions were, we can kind of look at these different areas of price ranges. Is this the whole year or just the month?
This is the month. So this is just a breakdown of the 130 transactions in December.
Got it. So out of those 130, you can see that 100 of them were under 500,000. 29 of them were under, that gap between 5 and $1 million, and only one went over 1.5 million.
And I will note on that 1.5 million, that was a 69-acre property. So it's kind of a unique one anyway. Yeah. Unique one.
So price ranges, we are still seeing quite a bit of activity under 500,000, but still things are happening above there if it's priced right. And here's how we can tell, right? Average square footage, average price per square foot. In January 22, we started at 173,000 and saw it definitely increase month over month. In June, we were still at 196, but then, and we'll show you in a stat here coming up how rates did affect some of the things that were happening with inventory, and inventory levels went up. But in August, we saw 168 as an average price per foot. And then all the way through in December, 164. So we started at 173, but the average for the year was at 178.67. So if you're currently active on the market right now as a buyer or a seller, that's a number that I would be looking at. If they're somewhat near that price, above or below, then probably competitive, right? On getting sold and making sure that that the transaction happens.
What really is interesting on that slide, Jeremy, is that'll give you an idea of people are prices going up or going down. That slide watches that would happen this year. You can really see it on that slide.
Yeah. So here's the total for the year. 2022, there was 2,400 transactions compared to 2,900 the year before. So we did see a decrease of 18%. So less people bought and sold last year than they did in 2021. A lot of reasons that happened. We'll kind of dig into some of those here.
And I'd say those 18% still want to move. It's just, rates. I mean, that's going to be, we're going to see that translate into future markets.
That's exactly right, because demand is pent up. Demand was high because everybody could afford it, but affordability has changed, and it's a lot tougher to change people's budget and income compared to, just the feds coming in one day and popping rates, right? People just can't afford those high prices and payments now. But in 2021, the average price for homes in our areas was 401. 2022, it did increase, but not that much. And we're going to look at some of the months here in between.
Well, this is really interesting because everyone thinks prices have crashed. There's the numbers right there.
There's the numbers. We still saw an average. But, Jessica, if we looked at 1 month only, and we were sitting December and October, those 2 months, we did see a bit of a crash, right? But 1 month doesn't doesn't tell the entire story, but over the year, we started up really strong, 8.9% increase until rates changed there in May, June time, right? And then until October and November, we saw it go down 9.6%. So we lost all of the uptick there. And then in December, basically, we ended flat or 3% for the entire year. So still kind of going up, but not a 30-40% increase. Here's the year. We must have had the month before, but the year of 2021, we were at 380. We ended the average price at 429. So we did still see a 13% increase in our average price in our market.
And we did talk about that month. And I still think because that one individual $1.5 million sale, and because we didn't have that many sales, that really, I think even drew our average sale price for the month up because it was such a big one. Yeah.
Yeah, we may want
to
throwing out the low.
Shopping, oh, sorry, Jared.
You hit it.
When you're shopping and you're just looking at prices, that snapshot, it's so important to look at the entire year because you think of, oh, well, geez, Louise, my house was worth this much, or I was shopping for this much. That month to month is hard to gauge what the accurate market is. That yearly one is the very most important number.
Real estate is a long-term game. If we were able to well, Zillow tries to make that happen, right? Treat it like a stock where every single day we go in and see what our stock did. But if that's the mindset of real estate, unfortunately, you'll never know when to get in and when to get out. It is a long-term game. So just be prepared that over time, you'll always win in real estate. That has been the case. This is an interesting stat that we follow because it tells us when you list your house at $100,000 in 2021, you could expect $99,000 on that property. Because I listed at 100, I got 99,000. 2022, that changed. If you listed your house at 100,000, you only got 90,000 because of the change in the market with the rates and the inventory levels that increased. And so if you list that was just the month of December, excuse me. And so we saw a decrease of our list price to what we actually sold for in the month.
And Jeremy, I think that also is always an indication of if a seller starts too high. And, and I think before you could have started last year, you can start higher and you would have got it. Now, if you start too high, it's still going to come down and settle in.
Yeah. So one of the things that scares me about that number is what I think in my head is if my house is worth 100,000 and I sold it for 99, and now my house was worth 100,000, but I sold it for 90. That's not what that meant. That meant your house was not worth that.
Yeah. Not value. It's just
it's not value.
It's what people listed at, what it sold for.
It's a present number, not really a historical number based on listings.
Yeah. Good point, Nicole. It's just what I thought that I'd start to sell my house at, and then what I actually got based on that number. So.
And I really like what Jeremy said. And when you think of that is you could expect to get, well, when we were in that market that was crazy, you could expect that people were going to pay whatever you asked. That's not the expectation anymore. You have to hit market value. You have to have it priced correctly to get, and that's where it will sell. Not just there's so few houses to buy, you're going to get whatever you want.
Yeah, that's a good point. So let's look at the full year then, lists sold, because in 2021, we got on average more than our asking price in the market. In 2022, we got 96.7%. And so we did see a 4.3% decrease. And I think that's what we're talking about is people, in 2021 were able to price it fairly correctly or high and get their price. In 2022, the market made an adjustment and sellers learned I can't be as aggressive on my price and I have to get more realistic based on what else is selling and how I compare to that.
So Jeremy, if you'll step one back slide, I just want to point this out because we talk about this a lot. FYI, Murdock Manwaring Company, this is the market. This is what on average the whole market. They were at 96.7. Well, Murdock Manwaring, our average was 98.66. And the reason we average that is because we're trying to price correctly from the beginning, the best we can, but we are outpacing the market on list price to sold price.
Yeah.
So in other words, we are netting sellers 2% more than the market.
Correct.
Yeah, which is a lot. I mean, you average sales price of 400,000, that's $8,000. You're going to get on average more with us than the average. So,
Great point. All right, let's get right into average days on the market, because how much time is it going to take us when we list our property? If we look at a balanced market, we're looking for a 5 to 6 month period that says that it's balanced. There's not more inventory. There's no more buyers than sellers. It's just right. So in 2021, we were only at 26 days, so way skewed towards the sellers because there was way more buyers buying things up quicker than 6 months of inventory. In 2022, it did increase, and we're at 71 days for the month of December, or a 73% increase. Now we're still looking.
I think that's the best indicator of a market shift is days on market getting longer.
Definitely a leading indicator of what will be happening, right? The average days on market. But look at the year to date. So we had a great beginning of the year, mushy middle, got to December, which was 73% change. But overall, we are still only 33 days on the market on average. It is an increase of 43%, but in order to get to that 6 month mark, we still got a ways to go. And that's naturally markets do want to get to that equilibrium. And so, we are going to be still seeing increasing inventories, increased days on the market. Even though the demand is pent up, the market wants to be at 5 to 6 months. And so it's going to find a way, unfortunately. And I believe we're on our way there of having the market figure that out. So 2022 or 33, let's look at, the last few years. 2017, was the biggest, where we still were only 54. So we're, 5 years into being a seller's market still, with the average days showing us that we're not at equilibrium of 5 to 6 months. So are things overpriced?
Overpriced. So that leads us kind of right into what people are talking about. Are we looking at this? It doesn't mean that we have overpriced homes on the market, and what tells us if we're overpriced or not. So we've been tracking this for probably 6 months now, talking about what's on the market and how we tell whether something's overpriced or underpriced or where we're at. And it comes from looking at comparable properties. So if we take a look at the average home in Bonneville, Bingham, Jefferson County, we're running 2,400 square feet to 3,000 square feet. They've got to have a 2 or 3 car garage, a quarter of an acre to a half an acre, and at least 2 bathrooms. That's an average home in our area. So this past month, those homes in that criteria were selling for about $145 per square foot. There were 8 homes in that criteria that sold at $145 per square foot. Now, if we take a look at what's called pending, which means it has not closed, but a buyer and seller have come to a price, and it is now pending sale instead of actively on the market. On average, there are 15 homes sitting pending at that criteria at $137 per square foot. So we don't know what the final price would be. It will probably inch down even a little further. That generally is what happens, is when they're pending. So you can see right there from sold, which is the rear view mirror view, to what's now, we're already having a different price per square foot. But this is the kicker. Are we overpriced? Active homes on the market. These are the ones sitting on the market, unsold. What is their average price per square foot? They're sitting at $150. So you can see right here, if you're sitting on the market and you're trying to sell at $150, the data is telling you that you have to get to $137 to get a buyer per square foot. The solds are even lower at $145. So if we're looking at a difference of $12.67 per square foot, you're $34,000 overpriced.
Yeah.
That's
we always tell everybody you're one of 2 homes. You're the one that sells or the one that helps others sell. Well, if you want to market hack and your home's on the market and you're at 150, I mean, this is pretty clear information where you need to be.
This is what we do at a listing consultation. When we try to advise you on price, these are the stats that you're going to look at for your home. And you got to look at that because you can sit at 150 as long as you want. It's the 137s that are going in under contract. So that gives us our first section, getting through the first section. Chad, why don't you take us through a snapshot of the month?
Why don't I take this? Yeah, let's do this. So anyway, snapshot of December. So 137 homes came on the market. That's less than what we saw in November, down 22%. Average list price of those is $421,000, and original list price to current price 99.5. So we're seeing some adjustments. 156 homes went pending, And this is the stat I hate every single month. 20.5%, 32 of those fell apart after pending. Way too high, way too
Yep.
high.
So Chad, a little stat on Murdock Manwaring. For the entire year of 2022, we only had 9 transactions fall apart. So we were sitting at about 11% for our fallout rate.
Yeah. Yep. And I mean, it's just about making sure your clients are on the same page, prepared, trained to go in there. But yeah, 20.5% is definitely not a good stat for our market. So I hate that. So anyway, moving on, a snapshot of December for, again, Bonneville, Bingham, and Jefferson counties. 61 homes withdrew. They had an average days on market of 75. Average price per square foot was higher, than what the average should be. And average price per original with the final was 94.4. So we're seeing more homes withdraw. Moving on to expireds, we're seeing
So
more
hold on, before you
expireds.
go on that, just a little tip. If we go back and look at that average price per square foot of what withdrew, and we look at what sold, they should be at about $164 if they wanted to sell. That means these guys sat about $38,000 overpriced and finally gave up, wouldn't go down to where the market is.
Yeah, and that's typically what you see when you see homes withdraw. When you see homes penned, they're basically the ones that are overpriced. So not always, but usually that's the case. We had 52 homes expire. Average days on market was even higher, 161. They're on almost 6 months. Okay, so usually that's a listing that went on and basically expired the listing, like they weren't able to sell it. Average price per square foot much higher, 189 bucks, almost 190 bucks a foot. They weren't even in the ballpark. Many of these, they were. I mean, they didn't even have a shot to sell. A lot of these that expired.
That puts them about $75,000 too high.
Yep. And we've run those numbers. I mean, we know that that's kind of what we saw. A lot of people, they're on about 75,000 too high, 75 to 80. And the average price, original price to the final was about 90.4%.
So what that also talks about, Chad, is they started so high, they came down 10% and still were too high.
Yep. So, yeah. So it really pays to make sure you have a good market analysis justified by comps to be able to do this. Let's go ahead and look at our current inventory and where we're sitting there on that. So basically currently on the market, we have 461 homes. Last month we had 551. Where did the other ones go? Well, those are the ones that expired and withdrew. We just talked about those. So we're down 16.4%, which I think actually gives us a better market of actual sellable houses, right? So our market cleaned up a little bit. It got a haircut. So average days on market of these are 95, combined days on market 106, original list to current 95.5%. So, that not quite as much as the last ones that expired. So we're getting, it's easier for us to be able to price these homes now. Before it was just changing so much. It was hard for us to stay ahead, but now, we feel like we've got a pretty good feel for the market, and we definitely we're in stride with the momentum of the market now. So average price per square foot, 184 bucks. And remember, 164 sold. So we have a lot of overpriced inventory still. And going back to what Jeremy was talking about, months of inventory, 3.5 months. So basically we are still a strong seller's market. This market has changed a lot from the last 12 months. But really, we're in a healthier spot than we were 12 months ago. 12 months ago, we were pretty much in a scary spot. We knew it wasn't sustainable. This is a sustainable, strong market. Where are all these homes sitting? We are seeing most of the homes sitting under $500,000. Average days on market at 82. Look at what we see as we go higher from 500 to $1 million. We have 157, but look what happens to days on market. 124 days. And then we go $1 million to 1.8, 129. Go up above 2 million, 366 days on market. Of course, that's only 2, but you only need 2 to do an average. So anyway, so we're basically looking and we're seeing that days on market continues to climb. We're seeing that the market is much stronger in that 250 to 500 range, even 600,000. If you're above 600,000, you are struggling with your, it's not a seller's market in all categories. The higher you go above 600,000. So anyway, moving on. We have
At that point, you just got to win the beauty contest, right, Chad?
exactly. Yeah, you have to make sure that, you're the one that sells or the one that helps others sell. And if your next door neighbor sells and you didn't, well, what's better about their home than yours? Because it's either a lower price per square foot, it's got amenities you don't. So you got to know that. It's not just price. So current pendings, we have two.
On our last, on 2 slides ago,
Mhm.
that as we're advising sellers, I am wondering, because people say, hey, I'm just going to put my market back. I'm going to put my house back on the market in May. So from what we're seeing from those numbers, are we continuing to decline, are continuing to soften and going towards the buyer's market? What would your assessment?
Oh, that's a good question. We're going to actually go through those actual trend stats. So that's good transition.
Yeah, we are going to go through those. And that is a great question. So, so currently we have pendings. We have 207 pendings, average price, 420,000, original list price to current price, 94.6. So most homes are getting a price correction, having to. Average price per square foot, 163. Notice how much lower. You get into a pending, there's a reason why it's pending. It's $20 cheaper a square foot. It makes it easy for the buyers to decide which homes to buy when there's such a big range between active and the ones that are priced right. So an agent that knows how to price a home has a huge advantage in this market, because guess what? You're going to sell houses. Average days on market of those is 69, which is crazy. We're seeing that number go up quite a bit. And it's just because it's taken a while for people to say, hey, maybe I do need to adjust price. And it's taken about 70 days to figure that out. So
yeah, we're going to start we're going to start looking at the cumulative days on market. That cumulative days is going to be if they went off the market, came back on, how much has it really been on the market versus this last time? So we'll start pointing that out as we go through each of the months. So let's take a look.
Jess, I was wondering, how good would it be if we could come up with some local and national trend slides?
You know what, Chad? I thought that too. I think that's a great idea. Let's see if we got what we got here.
Maybe 9. Let's go with 9.
9 slides. Let's try 9 slides.
Let's do 9 slides.
Here we go. So let's start with the national. This just came out last month. Lawrence Yung is the national economist for the National Association of Realtors, NAR. And this is what he put out for our national home sales on a monthly basis. You can see down here below that it is trending down. There is the trend of the national closed sales monthly. And that is easy to see as we start to trail that down. Well, how does that look when we look at Southeast Idaho? Looking at Southeast Idaho, here's our month by month. You can see we're very much a seasonally based area, but as you can see, our highs and our lows, there's more, we're starting to get lower, our highs are getting lower and we are trending downward, and we'll see that if we come back up to that in the summer, if we hit back up, or if we're going to trend and have that peak a little bit lower. You can see in 2020, that's where our summer months that we sold the most, we're at a pretty high peak and we're working our way down. So our low, we were at 130. Last year in February, we were 176. So we're trending downwards on number of home sales. Here's what it looks like on a national level on home sales monthly year over year. So 2020 is that mustard color. You can see that's where we hit some high points in 2020. 2021, it was very steady. You saw pretty much similar number of sales across the board. And then there's that 2022 is that teal color, and it is slowly trending down month over month. If we take a look at Southeast Idaho, the number of homes we've had by year. So we hit our peak in 2021. In 2020, we closed 3230 in 2020, and we're at 2457. So we are about at the 2015. That's where we're at average-wise on homes sold. So we're trending back downwards. We haven't hit the bottom yet, and we'll take a look when we do. Nationally, if you take a look at us versus when it was in 2008. So nationally, we're looking a lot about the number of homes. Looks very similar to the Great Recession, the change, but we don't think we're going to dip all the way down to an actual 2008 to 2010 level, but we don't know. We're following a little bit of the trend. In just whenever we see an economic shift, we'll see that affected significantly in the number of homes sell every time we change. So, oops, I'm going the wrong way. So on Southeast Idaho, home prices by year. So that little green line right there, that is the 4% year over year appreciation trend. So back in 1999, when it was our first time that we kept records, Our average home price was 102,000 in 1999. If we kept on a 4% trend, 2022, we should have been about 251. Well, you can see we were on that trend. We finally hit that trend line in about 2018. And then of course, the last couple of years has skyrocketed us up far over what our trend is. So normalizing us back down is probably going to be a pretty good thing for Southeast Idaho. Pretty good thing.
The crazy thing is we were on pace just until 2018. Just the last few years have just been crazy.
And because we were that really, everybody moved out Southeast Idaho, it felt like.
Idaho Falls especially needed a rate hike. I mean, we were going out of control.
So here's what that trend line looked like nationally. So that yellow line is the 4% trend line. So you can see if we think about what happened in Southeast Idaho, our trend spiked significantly higher than the national trend did. And so there's a little less correction for the national trend, but they were far below that 4% trend line for a long time. We were back on pace about 2018. You can see nationally, they were still well below. If you take a look at the middle, we talk about how long does it take for us to recover when we have a drop. It usually is a 2 to 3, in the Great Recession, 2 to 3 years trending down, and then recovery for 2 to 3 years. We don't know if we're going to see 2 to 3 years. We might see a year to 18 months recovery on ours. But if you're looking at when you're going to sell your house, man, you're going to get the most money in the next couple of years than right now before you're back on pace to where we're at, because we have to hit the bottom and recover. So if you're going to sell, now's the time, unless you're going to wait at least 5 to 6 years. Here's our Southeast Idaho home prices by month. How do we are affected by home prices? Well, you can see right there our trend. December, we ticked back up a little bit, but you can see as of the rate change in May, we've been trending downward on the average home price. Now, that doesn't necessarily mean our home prices are changing, that we're going down in home price, but what people are buying, they couldn't afford as much. So the average home that was being purchased was a lower price point. So that gives us an indication right there. Comparing us nationally, same situation, following the same national trend. That yellow line is the mortgage rates. As mortgage rates went up, what did we see? The trend of the home prices came down. And that's stats.
That was 35 stats in less than 30 minutes. 35 slides.
Pretty darn good. Pretty darn good.
I like that. That was really good information.
Yeah. So I hope everyone will tune in next month and keep up, because now we're going to start a fresh new year. Join us again for the stats.